telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a Deferred Sales Trust.
A real eye-opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like-kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty.
Our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Hello, everybody. Real quick, if you could squeeze in, if there's a chair next to you, that would be fantastic. And for those in the back, there's more chairs coming. It's a little, so that you can sit down. So if anyone's not sitting next to you, if you could squeeze in, that'd be fantastic. So hello, everybody. My name is Brett Swarts, and I am more than thrilled to be here. I want to thank Joe. I want to thank Frank. I want to thank Ben. The story starts about 4 years ago. How many of you guys have tried to cold call, maybe Joe or Frank and try to sell them your thing? Well, that was me. I was sitting in my office in Roseville, California, figuring out a way, how can I get the message across of something that I believe is a game changer for all commercial real estate syndicators, operators, and for those who are trying to help people create and preserve more wealth. And I remember cold emailing him, and I imagine Joe and Frank get a lot of emails and no response. And so I said, well, maybe I'll give them a call, and I didn't really have their numbers, kind of the corporate number, right? And I struck out, but I said, you know what? I got to find a way to try to get their attention the best I could. And so I went to the podcast world. How many podcasters out here? All right, you're my people. I love the podcast. If you haven't started one, I'd encourage you to do that. You can meet some amazing people, like a Kevin Harrington from Shark Tank, and like a lot of really smart people that otherwise I wouldn't be able to get in the room with. And so this presentation and this opportunity to be here is basically a 2006 to right now journey, and I want to start there and kind of give you a little bit of background about me and my story, because realize that I was at this point about in 2009 learning about the Deferred Sales Trust for the first time, thinking, I don't know anything about tax. I'm not a CPA. I'm not a tax professional. I don't want to step in something that I can get in trouble with. And, I'm not maybe qualified to do this. And so 2006, who remembers that time? It was kind of like low inventory, very high prices, rapid appreciation in deals, very difficult to find 1031 exchanges in short time frames. Well, I was at a company called Marcus & Millichap. Anyone familiar with them? And had an opportunity to learn from some of the best in the business about real estate. We learned about the 1031 exchange on about day 3. And we like to say we were like the Navy SEALs of multifamily investment real estate. And so I got to learn underwriting, and I got to learn negotiation, and I got to learn how to structure deals, how to buy deals, what's a cap rate, what's an IRR, all the really neat things about commercial real estate underwriting. And things were going well for a little while. And in fact, I found out that I loved commercial real estate, and I just wanted to learn a lot, and I wanted to grow, but it's tough. How many have been starting in a new business or been a broker before where you make next to zero and people tell you, you got to go close a deal to survive? Well, that's what it is, and you're in the boiler room making 60 calls a day or more. And so I found myself in a position of some momentum because I was learning and I was growing. But then who remembers what happened in 2008? And everything kind of hit the fan, right? So that's what happened, and I found myself in a position, how do I add value in a way that'll separate myself from the competition, but also keep food on the table? My wife and I at the time, it wasn't, let's just say financially, we were in a tough spot. I had just graduated from college, I was just getting going in the business, and we had a new baby at home, and one of our dreams was to keep her home full time, and I said, you know what, it's gonna be tough because commissions were another deal had fallen apart. It's a random Thursday. I remember sitting in my mentor's office, and another 1031 exchange fell apart. And I'm like, oh my gosh, I don't know how I'm gonna, buy groceries, pay for rent. I'm going into debt. And so I did what every, entrepreneur or real estate wannabe does. You get a side hustle. How many of the side hustles right now? Anyone doing side hustles? Okay, and so my side hustle was a place called Cheesecake Factory. Anyone remember Cheesecake Factory? You still go to those places, right? It's still open, right? They're one of the top restaurants. So I walk into Cheesecake Factory, I'm like, hey, look, I have 2 degrees and a minor, and I work at Marcus & Millichap. That's my dream, but I got to keep the lights on. Can I get a side hustle, right? Can I work here? And they said, we'll give you a job if you stay here for 2 years. And that wasn't easy, right? Because I'm thinking I'm the hot shot Marcus & Millichap, broker, going to make it in the business, but all of a sudden I found myself in a position where I'm not sure how I'm going to keep the lights on, keep things going. But I did that. I did that for 2 years. But when I was going through this struggle, so were my clients. See, I had clients who had overpaid for the 1031 exchange, and they had lost half. Some had lost everything. In fact, we went with a client. He had a $50 million portfolio of apartment complexes, and this is like early 2007. And we said, hey, we think it's a good time to sell. He goes, look, I don't want a 1031. I want to hold on to my properties. And over the next 3 years, between 08 and 011, he lost everything. And so when I was assessing what happened, we figured out that the 1031 exchange is not always your friend. By the way, how many of you participated in the poll today or last few days? It was about, what's your biggest frustration with the 1031 exchange? So I started asking that question, and the biggest thing that came up was the shotgun wedding, right? You got to get engaged in 45 days. You got to get married in 180. And people felt trapped and rushed and forced to overpay for properties, and now they were suffering for it. And so my manager brought in a gentleman who's now my business partner to speak on the Deferred Sales Trust. And we sat there listening to him, and I said, if what he's saying is Netflix and what we've been doing is Blockbuster, this will change the way we trade real estate. This will change the way we can help people exit well. And that began the journey of just testing it, talking to CPAs, rolling it out, getting meetings with people, but it was still very, very early on. And so I'm going to try to download as much as my brain can take into your brain right now in the next few minutes, okay, of what this thing is called a Deferred Sales Trust. And so for those who are wondering, what is a Deferred Sales Trust? First of all, it's not a 1031 exchange. It's not a Delaware statutory trust. It's not a tenant in common, okay? These get confused because it's a DST. DST, we like to say we're the other DST, or the Deferred Sales Trust Netflix version of the old Blockbuster 1031. And why do you guys even care today? Well, I think some of you might want to be able to raise capital. You might want to be able to help people create and preserve more wealth. And so what we've been able to find as we've navigated this, it's not just for real estate properties. It's also for cryptocurrency. And this is changing the game. And I'm telling you, for some of my clients now, it's so exciting because we've just broken what we like to call in my world, the 4-minute mile, right? Where most people think about the 1031 as only a way to defer tax and move into deals. And you might do a tenant in common, you might carve out something somewhere. But what if you could take cryptocurrency, defer the tax, and move it into your syndication, all tax deferred? okay, and raise millions instead of thousands. In fact, you guys did a survey, and a lot of the survey said most folks are raising capital from people who have $50,000 to $100,000 in their savings, okay, some of them in the IRAs, which is great. But what if you could do $1 million, $2 million, $3 million, $5 million, $10 million per investor and add value on the way in? While I was going through that Marcus and Millichap growth period, right, of learning everything about the Deferred Sales Trust, I found out a key quote, and this is the quote from one of my mentors there. He said, Brett, I know you're struggling right now. He goes, but I want you to imagine this, okay? You're on the phone with somebody, and the question is this: are you adding value or are you not adding value? How do you add value is by knowing more about their problem or their property or the area or a solution to something that they're not even aware of. That's the moment you start adding value. And he goes, the moment you do that, you're going to gain more clients. And that's what I want to help you do. I want to help you to add value before they even come to you by helping them to defer 30 to 50% capital gains tax. And so a few stats for everyone who's curious. There's about $2.5 to $3 trillion of cryptocurrency right now. Okay? And we have a saying around capital gains tax solutions that goes like this: it's no longer about cash flow, it's about tax flow. Now, of course, it's always about cash flow, okay? But guess what? The government has over $30 trillion of debt, and they're having to raise taxes. They're having to increase the capital gains tax rate. They're having to maybe potentially take away the 1031 exchange. All of these different things that are affecting tax flow, not just cash flow, okay? And so the Deferred Sales Trust is a tool to help you add value to your investors, to yourself, to folks who want to exit, who, guess what, they want to be in tangible real assets. A lot of cryptocurrency clients that we work with, in fact, I would say 98% of them want to be in real estate. A lot of them don't know how, okay? That's the expertise that you provide, the how-to, the operations, all of the things that Ryan was talking about, all of the things about depreciation, all the things about cost segregation. If they can exit and get into something that's not depreciable like cryptocurrency, move it into your syndication, right, or partner with you, guess what? They can unlock this tax flow concept, okay? So what can the Deferred Sales Trust do for you? Well, it can help your investors defer 25 to 50% in capital gains tax and defer income tax. It can also save a failed 1031 exchange. How many of you have had clients or potential investors call you and say, hey, I'm under the gun. I've got a 1031, I've got $1 million to place. Can I move it into your fund? Can I move it into your deal? And just to turn them away. Anyone do that before? Turn them away? Yeah, maybe a little bit. Well, guess what? We can save a failed 1031 exchange, and the funds can go turn around up to 80%. We have some stipulations we have to follow. Can go back into funds. In fact, you saw Brian Burke. Anyone know Brian Burke? Praxis Capital or heard of him? Okay, we have over $14 million with Brian Burke, and we've done that in about 18 months with clients. Part of what's really as Deferred Sales Trust clients, and yes, that is Reg B. We don't have to qualify on certain levels because we're not a 1031 exchange. And that's the beauty of the Deferred Sales Trust, okay? The next thing is optimal timing, right? Our parents taught us to sell high and buy low. They didn't teach us to sell high and buy higher 180 days later in a property that maybe we didn't necessarily want to purchase. And so the Deferred Sales Trust allows you to do that. I'm going to tell you the Monday morning quarterback story. I'm a 49er fan. Any 49er fans out there? Man, we're so close, right? But you imagine going back and you can tell Jimmy Garoppolo in a couple plays to do something that you saw the next day. Well, that's the Monday morning quarterback Deferred Sales Trust story. And this is what changed it for me, because I can talk to you about these things, but I want to give you a bunch of deal stories and actual evidence of what's happening. So this gentleman in 2006, before I even knew about the Deferred Sales Trust, he's a client of my business partners. Anyone from Minnesota, by the way? Minnesota Vikings Stadium. Okay, so this guy owns a lot. Okay, he's hundreds of millions of dollars, but he's selling a $20 million commercial real estate asset. This guy hates the stock market, and he's looking at the marketplace, and he's going, I don't think this is going to last. I don't think it's sustainable. Now, he didn't think 2008 would be so hard, but basically said, you know what? I'm going to sell high, and I'm not going to 1031 exchange for the first time, and I'm going to take a leap of faith and go into the Deferred Sales Trust. He had never heard of it. He wasn't sure. He deferred all of his tax, and guess what happened 5 years later? The bank calls him back and says, hey, you know that property is sold? Yeah. Did that crazy 1031 buyer out of California? Yeah. Who overpaid? Yeah. Well, we're just curious, do you want to buy it back from us? Because we just foreclosed on it. And he goes, well, maybe, what's the price? And he said about 60 cents less than what you sold it for. He goes, that sounds pretty good. Give me a couple days. And he's able to reallocate in what he was in a conservative stock market, liquid funds for his investments, they're all tax deferred, into an LLC and purchase that property at 60 cents on the dollar. We call it the Monday morning quarterback because how many of us, knowing what we know now, in 06 would have probably sold everything, paid all the tax, and just waited to buy properties at 50 cents on the dollar? That's the Monday morning quarterback. But what if you can do that without having to pay the tax, being able to defer the tax? Well, that's exactly what he did. So I'm sitting outside of my car, and at this point, I went between Marcus and Millichap to Cheesecake Factory to medical sales jobs, and I'm just trying to keep food on the table. You see, I had not only one kid from when I first started, my wife and I had an additional 4 kids. So now we have 5 kids. We had 4 daughters and a young son, and our dream was to be able to keep her home full time. And so how do we do that? Well, whatever it would take. And so I'm sitting in the medical sales job, and I'm going, okay, I'm making some good money, and I could do fine here, but my heart was with the Deferred Sales Trust and commercial real estate. And he told me the story, and I said, would you tell me it again? Would you tell me it again? I'm going, how does not everyone know about this? Like, if what you're saying is true, this is truly Netflix. And Netflix allows us, in the way of the Deferred Sales Trust, to have optimal timing, tax deferral, liquidity, and to buy when it makes sense for the client, okay? And so, by the way, who is the Deferred Sales Trust for? The minimum size deal, just to be real straightforward, is a $1 million net proceeds, $1 million gain. Okay? Unless you have 2 assets at $500,000 each that you're selling in a short period of time. Why is that, Brett? Because the ROI needs to make sense. Okay, we're closing about a deal a week these days, and if the ROI doesn't make sense, if it's not a home run for the client, meaning the tax liability is not big enough, then it's not a good deal. Okay, but who does it work for? Cryptocurrency owners, NFTs, business sales, okay? Investment real estate. It can save a failed 1031 exchange, even past the 45-day. Remember, you don't have to identify the Deferred Sales Trust because it's not a property. We're going to talk about what it is here in a minute. It works for GP and LP interest, primary homes, private stock, public stock, carried interest, captive insurance, artwork. So what's possible for you? Can this really help you? Well, the DST helped a gentleman named Shay Pope, who's a good friend of mine, and he's in the audience right now, okay? And Shay's story goes a little bit like this, but you can also hear him share the story. We're going to have a little breakout tomorrow. And Shay says, you know what, Brett, I'm selling my business, and I want to exit from my partners. But I have a zero basis in about a $2.6 million sale, and I have hundreds of thousands of dollars of tax that I don't want to pay. And I have a dream of launching a multifamily business, ground-up development with a partner. Is there a way to do that in an entrepreneurial way where I don't have to give up all control and it's legal and it works? Well, that's exactly what he did. And the answer is yes. In fact, he put $600,000 into a 72-unit multifamily property with himself and his partner, okay? And he's about ready to do a couple others as well in Tennessee and Alabama. He also put about $1.6 million because he wanted to diversify with Brian Burke and Praxis Capital into their hard money lending fund. Okay, they put another $300,000 with Lane Keoka, and that's Shay's story. Okay, and then it also works for Primary Homes. This is a client of mine we helped him sell an $8.3 million primary home in Palo Alto. Here's another client of mine. His name is Dave. Dave Levinson sold a multifamily property in Georgia, $7.6 million sale, and he deferred about $1.1 million in tax. We saved his failed 1031 exchange. By the way, he put some money with Ashcroft Capital and also Praxis Capital. Here's a property not too far from here in Colorado Springs that just sold, and this client sold a $5.1 million sale and moved about $5.1 million outside the taxable estate. For those who are curious, 40% death tax has nothing to do with the stepped-up basis. How do you add value beyond just capital gains tax and deferring that? The Deferred Sales Trust can do that. Here's the 2 syndicators that are maybe some like you guys. They have about 3,000 units now, and we did 2 deals for them. They were their GP interest. Brett, does all of the LPs have to go with me? No. We can separate the GP interest, and they did 2 deals, one in Arizona, one in Vegas. But this is the one I'm most excited about, and I'm hoping you guys catch this enthusiasm because the opportunity is a blue ocean of literally $3 trillion that wants to exit and defer tax and go into deals with you. Okay, and so on August 7, 2021, the first DST crypto deal was closed. By the way, for those who are running, the Deferred Sales Trust goes back 25 years, thousands of closes, billions under management. It's worked for just about everything you could think of, but for the first time, it worked for cryptocurrency owners. Without using a 1031 exchange, this particular client of mine exited $5 million of $13 million of crypto. He went on to exit another $2.5 million as well. Okay, we went on to another deal with a Google, former Google executive employee. She in her 20s bought Bitcoin for $50,000 and went to $50 million. She exited $5 million so far. Okay, so the deals go on and on and on, but this is the number one objection, and I have 3 minutes to do this. You guys ready? The number one objection, hey, Brett, this sounds amazing, but I need my trusted advisor to say yes before I move forward. I don't understand why my CPA doesn't know about this, and I just want to tell you one story, and hopefully it's going to give you some credibility to feel really good about it. In that video, you watched David Young. For those who don't, by the way, you don't know David Young? This would be kind of cool. A little bit. Oh, you don't know a guy named Bill Gross? Okay, maybe that. Or Ray Dalio? Well, Bill Gross, Ray Dalio, these are some of the most respected financial advisors in the world for the last 30 years. Well, where David Young with Bill Gross built PIMCO. Anyone heard of PIMCO? 80 billion to 1.2 trillion. These are some of the most sophisticated, smart people, and they did a 2-year due diligence. They get approached by a lot of people telling them to sell their tax thing, and they're very cautious to bring anything and put it in their name. And so they did a 2-year due diligence, and after 2 years with their legal team and everything else, they decided to not only join the Deferred Sales Trust in kind of inner circle, but offer services to help financial advisors who might want this, or Deferred Sales Trust clients who also want an extra level of expertise. And so what I always say to people is, if it's good enough for David Young and his legal team, is it good enough for you and your client's legal team? Okay, and we have lots of national law firms that have also reviewed this, but it's proprietary, it's protected. Your CPA probably doesn't know about it, but we want to encourage you to bring your CPA to learn more about it. But you can hear about David Young's story. In fact, he was on my podcast. If you guys want to check that out, you go to capitalgainstaxsolutions.com. He shares his entire story, and it's really powerful, okay? So if this sounds like you want to, and you want to help yourself or others escape feeling trapped by capital gains tax, and be able to raise capital from crypto millionaires so they can invest with you. It's also so you can unlock stable, cash-flowing, predictable multifamily, senior housing, mobile home parks, whatever your expertise is. They need you. They're waiting for you, okay? But you got to add value. You got to provide a solution, okay? So you can go to capitalgainstaxsolutions.com. We're coming out with our new book and stuff. And then, by the way, I know I couldn't cover a lot of the how-to. I'm going to do a quick 30 seconds of that. But tomorrow, Dan Hanford, Hunter Thompson, Shay Pope, my client I was telling you about, who's in the audience, and Stephen Perzavento, we're going to be doing a 1-hour meetup after the whole event's over, 5:15, just a few doors down, and you can join us. But all this isn't an installment sale. You can carry back paper for a trust, and when you do that, you defer tax. That's this short little snippet there. Come tomorrow, we're going to be mapping all of this out. No questions are off limit. I so appreciate all of you, and thank you so much for the opportunity here.